Hey guys, how you doing? So it's Gold Streams today. I want to talk about the trades that we did on pre-London. Today, the 20th of January. Now it's bank holiday in America, in the US. So I was expecting gold to sort of be consolidating. I came into the charts and I'm using the 15-minute time frame to explain this today because it's what I use for the entries. I came into the charts, and when I came into the charts this morning, gold had already moved like 150 pips, right? So I was keeping an eye to the left hand side just to see sort of what was going on the left. You know, we had a 50 pip range to keep filling, and above that we had a 40 pip range on the left hand side as well. I didn't feel comfortable taking an entry sort of when I came in at 7 a.m. So the first candle I saw was this doji candle here, which didn't respect market structure. It just continued to move up from this point here. So I'll show you. So we had a support here. It broke the low of the previous candle. We also broke the high and then closed a very, very small body doji. So we also had, just to keep in mind, we had a resistance up here, which I was waiting for gold to sort of start tapping the resistance. This was a strong resistance as well on around the 4 hour time frame, on the 1 hour time frame, on the 30-minute time frame. It's a shame we can't switch between the time frames on CTrader. But you know, it is what it is. It's the only one that allows me to do market replay and show you guys exactly how the trade went down in pre-London today. So as we were going through and sort of seeing exactly what gold could give us, we was waiting for market structure, right? So there's no point just because you come into the markets, you see a massive move happen. I'm not just going to sort of, you know, enter a buy and expect gold to keep filling the range. You know, it does that quite often. And yeah, I completely understand. A lot of you might be doing that. But for me, it was sort of more of a waiting game to see something that I understand. Now, as you can see, gold came up, tapped into this resistance area on the 4 hour and on the 1 hour time frame. Okay, so the resistance was around 27.14, and this is sort of where I was looking now to see if I could take a trade off resistance. Okay, to come down and fill the support area before we miss this here. So it's come down and fill the support area. So as you can see, 15-minute candle closed with a rejection, right? This is the open of the 30-minute candle. This is the open of the hourly candle, right? They left a massive wick to the top side of around 20 pips. This was going to be the initial entry, right? With 20 pip stop loss up here. Once it broke this low, and expecting price to continue down and actually fill this range all the way down to the support here on the left hand side, which was 40 pips. But I didn't feel too comfortable with entering just because it broke a 15-minute low. As you can see here, you know, candles very often break 15-minute lows. 15-minute is not a strong confirmation candle to enter in. So I waited. This would be the 30-minute low down here, 27.08. So I waited for the 30-minute low to actually be broken. Now, as I was waiting, obviously it requires a lot of patience to understand what you're looking for, right? So once this low was broken on the 30-minute time frame as well, we had the 1 hour low, which was down here, right, at 27.06. Now this was a significant 27.06, 27.07. This was a significant sort of break if market could break below this, because it would mean the 4 hour would flip bearish as well, right? So it's multi-time frame analysis. So the first trade, the first position went in here, right? And we entered our position. We had stops back up here. So the stops, because we entered in the 15-minute time frame, we used the 5-minute time frame to put the stop loss and to actually have our stop loss placement, right? So our stops were up there and not expecting price to come back, you know, and retrace that hard where it starts to sort of break the high. So this was the trade that we entered, and we're sort of holding the trade. We're waiting to see what the market does. Once the price broke, right, so once price broke this low, 27.07, this is now the 1 hour low has been broken and the 4 hour candle is also flipped bearish. So really now at this point, price has absolutely no business to come back up. Okay, so we're running in at around 22, 23 pips. Stop loss goes into break even at this point, right? And we're letting the trade run. We're expecting for price to come down and hit this sort of support level at the bottom here. And then that's sort of what we waited for. and that's exactly what gold did. Entries like these are a little bit more advanced because you have to start understanding sort of market structure and multi time frames. You know, an entry like this can't be just taken off the 15-minute time frame because it gets very risky on the 15-minute time frame. As you can see, it's a massive candle at 50 pips, right? You don't want to sort of have a stop loss of 50 pips and then a range to fill of 20 pips or 18 pips, because it's a negative risk to reward ratio. So this came down, hit our take profit level at around 30 pips down there, and that was it. We called it sort of a trade. We understood, yes, price can come all the way down, you know, and fill this whole range of around another 130 pips, but it depends what you're comfortable with in the market, right? At this point, once this move happened, I was making notes. I was just taking notes on my of the actual trade, and I was noting everything down. I'll show you this trade now, exactly sort of how it happened live as well, so you guys can see it. Perfect. So you can see the entry there, and you can see obviously the price coming down to hit take profit, where we were up about 19-20 pips when I recorded this. All right, fantastic. So we're going to move on now. So I'm taking notes, and I'm watching sort of what the market does, and sort of exactly how it plays out, right? So this was sort of what gold started doing coming into London Open now on the 15-minute time frame, and this is why I use the 15-minute to explain this, because on the 15-minute time frame we just had clean consolidation, right? We just had candles printed side by side. It created a support. We understand that we're in an uptrend. Okay, gold came down. It retested this support down here, right? It didn't even acknowledge the support to the left there, which was expecting. And this is what I started seeing. As I'm making notes, I started seeing this candle sort of move up. But because it's the second trade of the day, I'm not looking to take any impulse entries, right? It's the second trade of the day. All I'm looking to do is see if I can get a good position to enter gold and see if I can get maybe, you know, 20, 15, 20 pips out of this particular move. So I'm going to slow this down here just so I can show you exactly how the entry went in. And again, as you guys know, the best bit is obviously when you're waiting for a candle to make a bottom wick first, and then it starts making a top wick. So once this candle made its bottom wick, came down and sort of tested this previous resistance area, I entered, and I entered a smaller position at this point. Let's just say for demonstration purposes here, we go with a 0.5. My stop loss was back in this range, right? And my take profit at this point was around 20 pips, right? 17, 18, 20 pips. This is whatever, right? I'll show you again on the video. I can't remember exactly what it was, but we took 20 pips out of this range, out of this trade. So gold come down, it made a lower wick, it's now pushing up, it's got this wick to fill on the left hand side, it consolidated for a bit. This is the breakout candle. It was the 15-minute time frame. So, and it's the second trade of the day. So risk management was sort of the number one thing that I was looking to do in this trade. It didn't matter, you know, what I get out of this trade. It's just about not losing this trade or not losing the profits that I've already made by taking the first trade. Let me speed this up here a bit and show you guys exactly what happened. And again, as always, I'll put the video of this trade and how it went down. And we closed out around 20 pips on this trade as well. Now, why I closed out on 20 pips of this trade and I didn't hold the trade to fill the whole range? Two reasons. It's a breakout, but it's a breakout on the 15-minute time frame, not the strongest confirmation. The second reason is I'd already taken one trade and I was profitable. I'm not looking to sort of take the second trade and hold it full, right? So this was like a bonus trade for me. And I'll show you exactly sort of what happened after this as well. So I'm just going to skip this candle. So you can see this candle and the next candle broke the high and came down. Volatile candle broke the low as well as the high. It didn't matter to us. We was out the trade at 20 pips. And obviously I'll put the video in so you can see exactly the entry on the live trade as well. And this second one, and you'll see obviously we had stops at break even because risk management was the number one key because it's the second trade. But yeah, look forward to doing the next breakdown video, and thank you guys for watching.